Remember the economic recovery story that we've heard so much about? Well, it's not playing out in the oil markets. In fact, the concerns over fuel demand have crude poised for its biggest weekly tumble since July. Still, Goldman Sachs this morning turning more upbeat on the refiners, actually expecting appetite for oil to pick up next year. So let's get more on the oil markets. We bring in our oil reporter, Christian Smullinger, who joins us from Singapore. And Shmuley, let's talk about Goldman Sachs. Weren't they still expecting oil to hit $85 a barrel by year's end? So why do they keep maintaining this optimistic outlook? You tell me.
Well, I think a lot of what Goldman's been looking at is this idea of inventory restocking. We've seen the manufacturing numbers in the U.S. Decline a lot, so a lot of that inventory of finished products has been taken away. So as the manufacturers start to ramp up to replace the consumed inventory, it's going to mean more diesel fuel being used. So they're expecting that we're going to start to eat into these large diesel stockpiles that we have in the U.S., and that's going to help bolster prices and push oil back up to 85.
And what about these stockpiles in the U.S., Shmuley? Why does the U.S. continue to build?
Well, I think at this point we're in a really kind of a low demand period now. We're out of the gasoline season, the driving season's over, and the heating oils demand hasn't really picked up because we haven't gotten to winter yet. I think a large part of why we're seeing the crude stockpiles build is some of that floating crude oil storage has come onshore because we've seen the contango really narrow on the WTI futures curve. So it's made the incentive for keeping oil offshore, it just isn't there right now. It's gotten to be too expensive, so they're bringing that oil onshore.
Oh, so what does that mean for prices going forward?
Well, there's still an expectation over the next, as I was talking to a trader this morning, he was saying over the next 4 to 8 weeks we're going to see prices probably come down. At the same time, though, as prices fall, there's still an overall very bullish sentiment looking about 3 to 6 months out. So as people see prices come down, they're going to see prices going back into the 60s and into the 50s as buying opportunities. So that's going to maintain a lot of support going ahead.
And won't there be a lot of fuel use this weekend in Singapore with the big engines coming to town?
It probably will help a little bit, especially on the gasoline side, which has been a pretty weak market. So.
All right, Shmuley, try to behave this weekend. Thank you for that. Our oil reporter, Christian Smullinger in Singapore.